Hello, hello, hello. This is Carl A. Smith, aka Dr. Cash, coming to you with our weekly stock analysis for July the 2nd. What a week. Short week with the holiday. Hope everyone had a wonderful July 4th and were able to relax and spend some time with family and have a little bit of fun. The market was still in full effect over the time frame. While we were cooking hot dogs, this was cooking new all-time highs in most of your major indices. The S&P, the Nasdaq, and the Dow all saw all brand new highs. It's a continuing repetitive story that we're seeing pretty much week over week as the bulls are still in major control of the overall market, which is a positive if you're long. If you're short, you're really feeling a little bit of pain. However, we believe that the bears will begin to start to take impact over the next few weeks as we do reach kind of the century figure on the S&P, roughly about $300. So as we look across all the major indices, we have seen some pretty consistent moves upward week over week. However, we feel that a retouch of the all-time high in the S&P at 298 will be a rejection area for us as we look ahead in the upcoming 2 weeks or so toward the latter part of July. Now, this all could totally change as we walk into the first few earnings announcements as we step into our quarterly earnings season. However, we have seen a pretty consistent decrease in volume. Volume has decreased pretty consistently since the sell in May and go away adage was definitely seen, and we did see pretty significant pullbacks beginning in May. Now, we do feel that there is a little bit of room to the upside for the S&P 500 as we do continue to approach the round number of 300. The key century figure here at this level. Now, we do feel that there is an opportunity for a potential overshoot here. If we pull back our lens and look at a longer time frame, we'll pull back to a 3-year weekly, you'll see a very good indication of that overall trend line, and we're looking at roughly another touch at this level here. As we can see, 3 times in a row is typically a pretty strong reversal pattern depending upon the overall distance between each individual touch is long enough, and obviously you can see that there is pretty sizable amount of weeks, so that trend line will be much stronger versus the shorter trend line touch between just a few weeks ago and now. So there is an opportunity, obviously, to push through this trend line and go higher than the $300 mark, but we do feel as we get closer to roughly that 302, 303 level, there will be a larger reversal, which coincides with the beginning of earnings seasons. There's been a number of companies that have already kind of pre-released that their earnings may fall short of overall expectations. So again, the bias is still to the upside over the next week, but we do see if there is a lot of volume or a lot of short-term positive news, we should break through this shorter trend line and do an overshoot roughly towards that 303, roughly 305 area. So we do look for an opportunity for some type of reversal from that level back down into value and potentially touch the 288 area, 285 area, which coincides with our 20-week exponential moving average and a low volume node. So there is a higher probability that that could be the turn to continue right back up, kind of this type of pattern, and continue on upward, right? So we'll see what happens over the next few weeks, and we'll move now on to the NASDAQ. As well as the NASDAQ did also reach its all-time highs as well, given this short week, but it did have a strong punch to push through its overall resistance level that we have seen for a number of weeks here, kind of marked in this red line. Did do a slight retouch of this, but it did not fully make it. It did fill the gap that we did see from the front side of the week However, we do feel that there is some type of exhaustion that we could see in this particular area, and just similarly to the S&P 500, some type of reversal that could be seen as we continue to move forward. We'll take a similar opportunity is kind of pull the lens out to see where we actually are in conjunction from a longer term time frame. So we'll zoom in just slightly. You can kind of see it just a little bit better. We do feel that there is an opportunity for the NASDAQ to look at this as a double top, meaning two touches roughly around the same price. That could lead to some type of reversal back down into range, into value. And if you look at the 20 EMA here, and the 9 EMA here is looking at some opportunity of some type of convergence, which could be a potential for some type of support as we move forward into the upcoming weeks. Again, the NASDAQ is heavily weighted for some of your larger tech companies, Facebook, Amazon, Netflix, Google as examples, but those are also heavily weighted into the S&P 500. So as the NASDAQ goes, so does the S&P for a considerable amount of weighting of these larger companies. There is a low volume node. We do anticipate the 183 area over the next 2 weeks or so to be an opportunity for retouch if we can break through into value, which is below 188.01. So if we move on to the IWM, the IWM is one of the only of the big four that did not see an all-time high over this last week. We actually saw a slight reduction in price. If we zoom in a little bit, we did see a high of roughly about 156 and a slight touch just below 155. However, the IWM is potentially a leader of the overall indices. As this begins to do its slight pullback, that could be a showcase for an opportunity to continue to reverse downward. What we do feel for the upcoming week is a slight test of this trend line here, and potentially failing at that level. So we do anticipate, given the bullish nature of a little bit more room to pull forward on the S&P, the IWM has an opportunity to step forward and do a retouch, not only of value area high of 158, but also this trend line here. So we'll look to see what happens over the next few weeks, and we'll zoom in just to the most recent week of the year, and we can kind of see a little bit more detail on the touches that we are seeing at this level. So with a typical pattern, you do see some reversals you have to go lower sometimes to go much higher, as well as you do see a little bit of a convergence here at the point of control with both the 9 moving average as well as the 20 moving average, which is an opportunity, and we look at that as some type of a magnet for a retracement for the bulls to potentially step in. Now, if we do see that this area is broken, we do anticipate a full mover back down towards this pretty large gap here. So we'll see what happens over the next couple of weeks, and we'll come back and report out to you. So we'll conclude our indices with the Dow. Again, as with the other 3 majors, we did see a all-time high that was pushed forward with the Dow 30. And we did see a potential of continuation upward, but we do have a very solid trend line that is intact from a resistance point. So we do feel very similar to the S&P and the NASDAQ that this will be a quick retest and a failure and reverse back down, at least to test the value area high at 266. So we feel a little bit of an upward movement there. And as you can see, that trend line for resistance goes all the way back to October of this past year, where we see it touched roughly 3 times. Now, between this last few weeks, second week of June and coming into this second week of July, we do feel that there will be some type of breach, but it will fail given the longer term aspects of the trend line that we did see going back to October. Now, all of this could go by the wayside depending upon how aggressive We are in some of the earnings reports from the Dow, but our hypothesis is that there'll be a little bit of a push upward, but that will fail in some type of reversal back down into range, roughly at that 262 level. So we'll see what happens. And as with anything, try to keep your risk low and use probabilities to anticipate what could happen. And one of the things that many traders talk about is what you expect to happen when it doesn't happen. That also is an indication of some type of potential reversal. With that, we've concluded our indice review for this week, and we'll leave you with a couple of trade ideas as we go into the rest of the week. We do want to leave you with a few trade ideas. The first one is Live Nation Entertainment, ticker symbol LYV. As you can see, we have a trend line here going back to 2017 that is looking to be touched again. All things being held equal, that this trend line will continue to be touched and potentially fail. You can see multiple touches over the last year plus in regards to just holding. We anticipate a downward price movement because of this trend line, so we anticipate a movement back, potentially a what we call look above and fail. If we do bring the chart down and look at a shorter time frame, we'll zoom in on the daily. You can see that this trend line has held pretty consistently over the year in regards to failing to break above that particular price line. So again, all things being held equal, we anticipate a movement back down into range. It definitely, if we can get below 68.78, which was the low of this past week, that will be a strong bearish signal. So as we go into next week, we will be continuing to watch a potential look above and then failure. We would like to see things kind of come back into this range here, roughly around this trend line here, which is roughly about 67.5. So let's watch Live Nation over the next couple of weeks, and we will see what happens. Again, we will be posting all of our trade updates on our Facebook page. If you go to facebook.com/Carl A. Smith Holdings. The last trade idea we're going to leave you with is Amazon. As stated in our video, we're coming up to our earnings season, and we do see Amazon coming up again to touch its multi-week trend line from a resistance standpoint, and we anticipate this also holding where price cannot get above. Now, we're roughly 50-50 on this one, so it could be a little bit of a crapshoot, but sometimes you have to take a little bit of risk to get a little bit of reward, but you want to have a little bit of a calculated risk. So as with anything we've said in our videos, if you keep knocking on a door, relatively often that door will break. At the same time, you also could be rejected. Now, 3 times previously, this price has been rejected, as you can see here in the yellow ovals. So we do anticipate, depending upon the broader market, if Amazon cannot break above this level, we do anticipate a pullback into range and potentially back down into the 1850 level. We did see a quick bounce on the value area high from a weekly perspective, so this could be a indication that this could be a bullish move upward. So we're going to watch it the first couple of trading days and see what happens. My hypothesis is that we will do a look above and fail, very similar to our previous equity. Look above, get breached, this trend line, and then reverse right back down, potentially into this low volume node area here at roughly 1885. So we will watch this as well and see what happens, but this is roughly a 50-50 shot, so we may look at some type of option play that could send Amazon into a trading range as we move forward into the rest of the trading month. So with that, we'll leave you. And as with always, it's your money and it's under your control. Take care.